Hello, everyone. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. As always, I'm very, very excited to welcome you all to yet another promising edition on the Forex Morning Mastery, our midweek review, where we are going to be looking at how well our performance has been so far this week, and of course using that historical data to prepare ourselves for the second half of this week. And I do hope you guys are ready, and in fact we've had some splendid time during the course of the week. Significant profit, especially on my favorite asset, the XAUUSD, where we saw price action hit an all-time record above the 2,480 area, giving us some significant amount of profit. Though the other assets are still struggling to gain some momentum, though we are able to gain something following the CPI data from the United Kingdom this morning. We are definitely going to be looking at all of this data in detail to see how we can prepare ourselves for today's and for the second half of the week. So I encourage us all to stay tuned in, as we do have very insightful and simple trading setups that will be helping us to navigate through the current market dynamics. And also, I would like to say that in the last couple of days, I wasn't available to give my usual regular updates on my social media platform due to the recent activity I had recently. I had to travel, and Monday was very busy for me. Yesterday, I went on a journey, and thank goodness I'm back, and I'm very sure I will be able to meet up with where I was lacking during the course of the week. So I'm so excited to be with you here this morning, and I trust you as well. And please let me know in the comment section here where you're tuning in from, and let's make this an exciting session. All right, and also I also encourage you to include the Forex Morning Mastery hashtag in your comments or in the comment section. Whichever case, drop the Forex Morning Mastery in the comments, or even add it to your comments as you drop them in the comment section. So thank you very much, guys. I really appreciate it. And with that being said, oh, I've not forgotten you, my newcomers in the house. For those of you who are joining us for the first time, you're very much welcome. I'm very excited to have you with me here this morning. And let me quickly explain to you what this is all about, so you don't get to mix things up. So the Forex Morning Mastery is a platform that was designed to do live follow-up details on the assets I normally monitor through the course of the week. And I usually share a couple of videos giving an indication of what my ideas are ahead of the week, that is during the weekend. And here on the Forex Morning Mastery, we come here together and look at things from both technical and fundamental perspective to really have a deep insight into how market participants are behaving, and of course using that information to strategically position ourselves for the next move. And it's also important for me to emphasize that this is not a signal service platform, but a platform where we come to understand what really is going on in the market. And of course, depending on what type of trader you are, be it a scalper, day trader, or swing trader, you have the privilege of using that information to tailor your trading strategy accordingly. So I'm so excited to welcome you on board, and hoping to see more of you on this platform. So if you have any questions whatsoever, feel free to drop them in the comment section as regards to the asset we are looking at, or anything that has to do with the financial market. So I'm so excited to have you here, and let's dive right into the business. So I see a couple of comments. Hello, Sheriff Abdul Kadiri, good morning to you. Okay, from Abuja, good morning to you. Glad to have you with me today. Odueno, good morning to you too. Glad to have you around with us this morning. All right, so with that being said, let's dive right into the business. And as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for today. And of course, based on the asset we are monitoring for this week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. And usually we focus on high impactful event, but on days when there are no high impactful event, what do? We extend our search and include the mid-tier economic features just for us to have an insight into what may likely be driving the sentiment in the market for that day or for that week. Now, so far this week, we've had some very important event, though this week is not really laced with high impactful events, especially from the United States. But we had some mid-tier economic features. Okay, so for instance, on Monday, July 15th, we had the New York Empire State Manufacturing Index, which came in lower than market expectation. And of course, we witnessed the chairman, the Fed chair speech. We witnessed Mary Daly's speech, who is also a member of the voting committee of the FOMC. And of course, the narrative is quite simple. Inflation is gradually easing in the United States. And of course, this has incited tremendously the idea that interest rate will be cut anytime soon. In fact, everyone is projecting September 2024. And if you look at the CME Fed Watch tool, which is a tool that is used to understand the sentiment in percentage of what market participants are thinking, as at this morning, the CME Watch tool is saying that 100% of market participants are now convinced that interest rate will be cut in the month of September. Now, this is compared to the previous week, which was at 65% thereabouts. Now, it is quite convincing that the Fed will be cutting interest rate. And what is going to be happening? What's the implication of this? Well, if the Fed is going to be cutting interest rate, this is going to negatively affect the US dollar, as majority of the holders of the US dollar assets will be dropping this asset, taking in their profit quickly, so that they don't get caught up in that cut. So this is one significant thing that is likely going to happen, making the path of least resistance for the US dollar to the downside. And of course, we saw how the gold took advantage of the sentiment, riding the momentum all the way into the all-time high. We are going to be looking at that in a moment. Then on Tuesday, that was yesterday, we were looking at the retail sales data from the United States economy. And this is a data that measures the total receipt of retail stores representing consumer spending in the United States economy. And this data here provides us with an insight into the health of the US economy and consumer confidence, hereby influencing expectation about future economic growth. And usually when the data comes in higher than market expectation, it positively influences the currency asset of that particular economy. But looking at what we had yesterday on Tuesday, it wasn't that impressive. The previous one was at 0.3%. Market participants were expecting no change, an unchanged situation, which actually came in just as expected, though the retail control group came in higher than the previous month, which is not really that significant if you would ask me at this point in time. So that was that for Tuesday, July 16th. And then we saw here this morning, we were looking at one single hour impactful event from the United Kingdom economic docket, and that was the CPI data. In fact, this was a major headliner, as majority of market participants were looking forward to see what the inflationary pressure in the United Kingdom is. And for those of you who do not know what the consumer price index really is, well, this data here measures and examines the average change in prices paid by consumers for goods and services in the last 30 days. And a higher than expected CPI can lead to concerns about inflation, impacting the sentiment in the market, as it may prompt expectations of tighter monetary policy to control rising prices. So it's considered to be an inflationary data, giving us an insight into how inflation is in that economy. Now, if we look at what came in this morning, you will see that we had a 0.1% expansion, which was just as market had expected. And for the year on year, it came in at 2%. Though the month on month is a little bit lower than the previous month. So this simply tells us that inflation is gradually easing in the United Kingdom, and we may likely see some interest rate cuts anytime soon. But that is not the case in this case scenario that we are talking about, as the service sector, there's what we call the what's it called again? We call it the service inflation in the service sector, which is one key factor that has been preventing the Bank of England to cut interest rate. And in recent time, if you had followed the UK policy, the Bank of England policy makers, you realize that they have been showing concerns as regards to inflation in the service sector, which could be a key determinant of whether or not there will be cutting interest rates. So that's generally inflation is easing, but in the service sector, prices are still very, very high. Now, as a result of this, this may result in them pushing back interest rate cuts, which is likely going to also favor the ascent of the pound sterling too as well. So it's not cast in stone that they will be cutting interest rate anytime soon, and of course this is favoring the pound sterling. And if you look at the pound sterling chart, you will see how the market had reacted this morning. We are going to be looking at that in a moment. Then, which other event are we supposed to look at today, which is quite important? Okay, another important event that we would like to look forward to today is the industrial production from the US economy, coming in about 5 to 6 hours from now, and this will be giving us an insight into the health condition of the industry in the United States. We are talking about factories and manufacturing areas in the United States. So if the data comes in higher, it is expected that the it could probably influence the US dollar, which I doubt it will at this point in time. So we'll look forward to see what that data is going to be like. Then we also have a couple of speeches from the United States today. We have Wallace, who is also a member of the FOMC voting committee, is going to be speaking today. So we are going to be having an insight into the economic outlook and what he thinks about the future interest rate decisions for the Feds. Then we also have Beige too as well. So these are events that we also want to look out for. So I encourage us all to mark out this on our calendar so that we can be around when they're about to happen, looking out for structures that we can use to strategically position ourselves for the next move. So these are the events we are looking for today. So I encourage us all, let us mark it out and let's prepare ourselves for today. So with that being said, we will be diving right into the business, and as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And on the USOILSPOT, remember, we have been selling this asset since the beginning of the week. Prices of the US crude oil had continued to experience downward pressure, and this could be attributed to the concerns surrounding the health of the Chinese economy and its potential impact on global demand. Now, what do I simply mean by this? I told you on Monday that the report coming in from China that was on Sunday, I guess, prior to our live session on Monday, we saw the Chinese GDP slow down by 4.7%, though it's quite encouraging anyways. But if we compare it to the previous month, which was at a 5.3% expansion, it shows that there has been a little bit decline in the last 1 month, which is not something that is a good signal for US oil buyers at this point in time. And this has further incited this bearish momentum we are seeing here. Then also the retail sales data from the Chinese economy also showed weakness, as we saw a 2.0% year on year and falling short of 3.1% expectation and 3.7% growth recorded in the month of June. Then another factor that is likely going to be influencing the US crude oil markets for the second half of this week is the potential for the Fed's cutting interest rates anytime soon. Now we know that this commodity is considered to be a US dollar denominated asset, and whatever happens to the US dollar will definitely influence the price of the US oil. And I've countless of times talked about the implication of the value of the US dollar to the US oil commodity, in the sense that if the price of US oil continue to decline, it usually favors the demand for US oil spot. Now, why is that? It's quite simple. For those countries, that means other currency assets, who intend buying the US oil spot, they will need to convert their currency to US dollar before they can purchase US oil spot. US oil spot. Now, as a result of this, if the value of the US dollar is high, then the US dollar becomes very expensive to convert to, making demand reduce, because if it's expensive, demand will definitely reduce. But if the prices of US oil spot continues to drop, the value of the US dollar continues to drop just as it has been doing in the last 3 days now, this is likely going to favor the US oil demand. So I'm thinking that we may likely see an increase in demand during the course of the second half of the week. And another factor that I'm also considering and putting into the picture is the crude oil stockpile report, which came in on Tuesday. And I shared with you in my commentary yesterday before I traveled that the US oil, the AP high report recorded a sharp decline in the, I'm trying to look out for the report here, which I shared yesterday. So let me see if I can find it. I can't remember really what the data was as at yesterday. Okay, I can't find it at the moment, but there was a sharp decline in the API report. And the API report is a report that shows the crude oil stockpile in the United States. Now, if the crude oil stockpile increases, it means that the demand in the market isn't that much, so they had to save more oil. But if the crude oil stockpile drops, then that means that demand is more than the supply, and they need to eat into the stockpile to meet the demand in the market. So with a drawdown, it shows that there was increase in demand last week, and from our simple economics, what this simply means is that if demand continues to rise, then price will definitely rise in that regard. So I'm thinking that based on this parameter, we could likely see some expectation in increase in demand. Now, if we look at things from a technical standpoint, the structure we have on the 1 hour time frame is quite simple for us to play around with. Now, look at the structure here on the 1 hour time frame. I hope you can see my screen. So right here on the 1 hour time frame, right at the beginning of the week, we initially had a range bound structure where price action was confined within the $82.50 level and the $81.58 area, giving us an indecisive phase, a consolidation phase, of course. And whenever we have this kind of range bound structure, you know how we do it in this community. We exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range bound structure to give us an opportunity to sell. Now, of course, price never attempted the breakout of the resistance line, and this negated the idea of even considering buying this asset. So it was more of selling during the first half of the week. And with price breaking down the support line of that range bound structure, a sell position was triggered, as you will see here, and price dropped into the $80.35 level. That's about 120 pips thereabout before the bullish traction began. But at this point in time, after moving stop losses accordingly to secure the position, we have been taken out of all the sell positions. Now, with the emergence of buy pressure at the $80.35 level since yesterday's trading session, we may likely be seeing the beginning of the second leg of that impulsive move that started about a month ago. Now, look at what has been happening here in the last 24 hours. Every attempt by sellers to break through the $80.35 level has been negated by buyers at every point in time. And now this for me is a sign that buyers may likely be gaining momentum behind the scenes. Now, if we take the structural setup into consideration, after aligning the lower highs in this market, we do have a descending trend line to work with for today's trading session. And for those of you who saw my commentary this morning, you will be familiar with this setup we have here. And from a technical standpoint, or let me say a theoretical standpoint, when price action continues to trade below our descending trend line, we want to be looking out for patterns and structures that support the idea of selling that asset. However, if price action breaks out of that descending trend line, then it is high time we started considering buying the asset, looking out for confirmation, and then joining the move. Now, if we look at what has happened here in the last couple of hours, we finally saw price break out of that descending trend line. As you will see here, we had an engulfing bullish candle striking through the $81 area, and it appears that price action is coming back to retest the structure in an attempt to continue the uptrend move. Now, with this in mind, I'm beginning to shift my bias from bearish to bullish. So what I will be doing at this juncture is to look out for buying opportunities at the breakout of the $81 area, which is a psychological level it has been broken out of. Price has broken out of our descending trend line, and we see price retracing back into structure. So placing a buy stop order above the $81 area is looking promising at this point in time. And of course, we do want to be having enough breathing space to allow price action to move around, because we could see some volatility as the industrial production report comes up later today. So I'm looking at between 40 to 50 pips stop loss, depending on which type of trader you are. Between 40 to 50 pips is looking quite promising. We want our stop loss to be way below that descending trend line, so we can give enough breathing space for price action to move around. Now, if price continues to climb and find new highs, then we have multiple levels to maximize the profit on this chart. We have our support line at the beginning of the week, which was the $81.58 level, a level which has been a strong demand zone. On Monday, we saw it serve as a demand zone during the New York session on Monday too as well, before it was broken to the downside. So if price breaks out of this structure, we look out for more opportunities to buy. And then if price goes on to break out of our key level at the $82.50 level, we'll definitely be adding more buy positions to our existing trade. So at this point in time, as long as price remains above that descending trend line, I will definitely continue to look out for patterns and structures that support the idea of buying this asset. However, in as much as we're looking out for buying opportunity at this junction, we cannot ignore the potentials that sellers can also come into this market. Remember, since this week began, we've seen selling pressure exerted on this chart due to the concerns as regards to the Chinese economy, and it is not going to be reasonable for us to negate the possibility that sellers can still continue. Now, what are the conditions that we would like to see on this chart that will make us feel comfortable joining a bearish move to the downside? Well, since we have our support line for this week at the $80.35 level, it will make quite a lot of sense to join a decline only if the support line is broken and retested. And in fact, if we have price below the structure, price will be back within the seller's territory, which is the descending trend line we marked out earlier. So the only condition that will make us sell the US oil spot is for price to drop down that support line and that descending trend line. So in that regard, I encourage us all to mark out these levels and trend lines on our chart, as it is going to be playing a significant role in guiding our trading decisions for today. So this is my simple view on the US oil spot for today's trading session. I hope I made myself very clear, but if you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And don't forget to give the video a thumbs up if you have found this content helpful in helping you make your independent trading decision. Support the channel by clicking on the like button, and of course your likes are also a source of inspiration for me to do more and share more of this content on a weekly basis. And thank you very much for your support. So with that being said, let's see if there are any questions before we move on to the next asset. See you in about 10-15 seconds from now. Cheers. All right. So I see a couple of comments here from I see you, Sheriff. Sheriff is asking, Google is yet to refund my 2K after cancellation of my initial subscription gold challenge. Okay. All right. Okay. It will take a while because probably due to reconciliation and considering the fact that it's an offshore transaction, it could take a while, and it depends on what you use to actually do the subscription. Is it your credit card? Is it your debit card? Is it I don't know, is it your Google Play Store, whatever it is, but definitely it will take a while. So sometimes it takes 3 to 5 business working days before this kind of resolution happens. But if you are concerned, you can easily send a mail to Google, I guess. I don't know, or you can send a mail to Google. You can Google customer service for Google and send a mail to them narrating your ordeal and then the detail of that transaction, and I'm sure they will attend to that. But I'm sure it will be sorted out. Don't worry, it will be sorted out. All right, who else again is here? Hadelo Adediro, good morning to you. Glad to have you around with us this morning. Thank you very much. I also see you, Tamiklo. Good morning to you, Tamiklo. Trust you are doing very well. I'm glad to have you around today too. Okay, debit card. All right, no problem. Just it will be sorted out. Don't worry, it will be sorted out. It takes usually 3 to 5 working days. Normally, that's what it takes. All right. Okay, so in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far here has been quite explanatory. So let's move on to the next asset on our watch list. Stay tuned in. All right, so the next asset we are going to be doing this morning is the GBPUSD, that is the pound sterling against the US dollar. And of course, the week started very slow. Of course, we had a choppy market condition. We had a loss at the beginning of the week. We had a buy position which was triggered at the 1.29 910 at the beginning of the week, and unfortunately that position went into a loss as selling pressure resumed in the market, and this has led into a consolidation phase where we saw price action confined within the 1.29910 level and the 1.29260 area for the first 36-24 hours of the new week, giving us an indecisive phase and a range bound structure to work with. Now, yesterday we had a sell position triggered, but for me, I actually did not take this trade because I traveled. I told you I traveled, and I didn't want to spend too much energy trying to monitor price action while my mind is another place. If it's for gold now, I would have taken a long-term position on that one. So I decided not to take it. But if you are taking that position, remember I told us all in my commentary that we should ensure that we move all stop losses as soon as price moves significantly in our favor, due to the expected volatility that could happen following the Fed chairman's speech, the US retail sales data, and the likes. And I do hope you moved your stop losses. We saw price move about how many pips was that? It moved about 20 pips thereabout. And then if you had moved your stop losses, you must have been taken out of that position. And fast forward to this morning, we saw the United Kingdom CPI data, which came in just as market had expected, and showing us signs that inflation did not change at all in the last 30 days. And of course, the market's reaction to this data was quite impressive as we saw price break out of the structures we identified yesterday morning. Remember, I was telling us all in my commentary that we're going to be looking at buying at the breakout of both the 1.29845 and the 1.299100 area. So at this point in time, you should be having a minimum of 2 buy position, which is running with about, let's see, the first buy position is currently running with about 45 pips in profit, while the second buy position is running with about 40 pips in profit. So we roughly have about 80 pips on this particular one. And for those of us who did capitalize on this opportunity, well done and kudos to you on this one. Now, with price action moving significantly in our favor, it is high time we want to be moving our stop losses to secure some profit at this point in time. I did mention this in my commentary this morning, and I do hope you have done so. Personally, my suggestion is anywhere between the 1.3010 level and the 1.300 area, that psychological area we identified on the higher time frame. Remember, we did a top-down analysis on this asset at the beginning of the week, and of course we talked about how significant that 1.300 area is. Maybe for the sake of clarity, I will be sharing that with you in a moment. So please, let's ensure that we have enough breathing space for price action to move around. Don't let's get too attached with the profit that we have. Let's move our stop losses wide enough. If the market takes us out, we'll still have more opportunities to join the uptrend move, if that is going to be the case on this one. So with a well secured position at this juncture, what is going to be our next line of action today? Are we going to continue buying the GBPUSD, or are there chances that price could decline in one way or the other, considering the structure we see on the 4 hours time frame? Now, for clarity's sake, we will need to scale up into the higher time frame so we can look at things from an holistic perspective and also have a detailed understanding into how market participants are behaving at this point in time. Now, if we take into consideration the inflation data this morning from the United Kingdom, it shows that inflation remained unchanged in the last 30 days, which is a sign that we may be seeing a easing in inflation. In fact, inflation is at the 2% target the United Kingdom had set about a year ago for their monetary policy actions. However, inflation in the service sector is a key factor preventing the Bank of England policymakers from initiating an interest rate cut anytime soon, as the inflation in the service sector still remains at 5.7%, which is quite high compared to where the target is at 2%. So we're still looking at about 3.7% to meet the target on that one. So this is concerning, and this might likely incite the idea that the Bank of England policymakers may want to maintain or leave this interest rate unchanged for a while again, and this is going to be favoring the pound sterling, as investors will prefer to push their funds in the pound sterling compared to the US dollar, where market are already projecting that interest rate will be cut anytime soon. Now, if we take all of this into consideration, let's look at how this is going to relate in terms of the technical details. Now, going up into the 4 hours time frame here, this was our structure at the beginning of the week, you remember, and we talked about how price action had been within an ascending channel in the last 1 month. Since mid-June, we have seen price found higher highs, as you will see here, giving us the resistant line of that ascending channel, as you will see right here. And then we also have the support line of the ascending channel, which is somewhere around this particular area. Now, if we zoom into the current structure, you will see that price action is right back within that resistant line of that ascending channel. Now, the question at this point is, if price will price continue the uptrend by breaking out of this resistant line, or is it going to respect the resistant line just like it did at the beginning of this week, as you will see here, to retrace to the downside? So we are looking at two possibilities here. One is, will price form a reversal setup around this area to incite a retracement back into the support line of the ascending channel, or are we going to be seeing a uptrend continuation pattern around this area that will incite a trend continuation? So you will agree with me that we are at a crucial juncture in this market. Now, if I scale up into the daily time frame, remember we talked about the psychological level at the 1.300 area, a level which ironically, this same time last year we saw price drop from this particular area. Now price has broken out of that structure. The same thing also happened last year. We saw price break out of the structure around this area. So it does have a memory for buying power, as we saw price move about 130-40 pips thereabout during the month of June of last year, just the same precise time we are talking about here. Will it do the same this time around? Let's wait and see how the market will react to that structure. Are we going to see price continue breakout retest of this area to continue the uptrend, or will price just break down and incite a sell-off here? So we are at a crucial juncture in this market, so it is very, very important for us to exercise patience and wait for significant confirmation before jumping into any positions at this point in time. So in preparation for the second half of this week, I have a new trading setup which I just identified this morning. Yesterday night, of course, I did this yesterday night. I placed a buy stop order above the 1.29750 to add more positions. I did this immediately I came back from my journey, and I was too tired to publish anything yesterday night. So we saw this situation here yesterday night. We are looking at something that looks like a uptrend continuation pattern, that is a flag pattern. So if I do a visual representation of what I'm talking about, so we have the impulsive leg, we have the formation of the pattern right here, as you will see. And from a technical standpoint, we want price to break out of the resistant line of the pattern to give us an opportunity to buy. Hence, I had a 1.29750 level, and since yesterday night we can see this morning after the CPI data, of course, because I placed a buy stop order there. Price moved, and you can see we had about 57 pips. I had my TP target zone around this area, and price actually has eaten TP target at this point. So will this momentum continue? That is where my concern is right now. Will this momentum continue to the upside, or are we going to see a retracement back into structure before another wave of bullish momentum will happen? So for those of us who still have a buy position running, please move your stop losses, secure the current buy position, and let's wait and see how the market will react here. So the next couple of hours will give us some insight. Are we going to see some consolidation phase? That is one thing we are going to be looking at. And what pattern or shape will the consolidation phase form? Is it going to form a double top structure? If it does, then the breakdown of the neckline could give short-term trading opportunity for scalpers and day traders into this area. Let's look at how many pips that is going to be. That's about 50 pips thereabout if you are a scalper looking out for this. But personally, I'm not going to be taking it, as I will wait for price action to come back into the structure that was broken here to give me an opportunity to buy. Of course, I will be giving us updates on both my TradingView and Telegram platform. However, if that is not the case, and instead we have another flag pattern maybe, or a bullish rectangle pattern, any case, maybe something like this happens, it could take about an hour, 2, 3 hours or 4 to happen. A breakout of the resistant line will then give us an opportunity to join that uptrend move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us update as at when due. So this is my simple view on the GBPUSD for today. Please remember, move your stop losses accordingly, secure this current position, and let's see how the market will play out in the next couple of hours. If you have any questions whatsoever, feel free to drop them right in the comment section. I'm here willing to be of help in that regard. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever. And of course, you can use that time to mark out the structures on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So see you in about 15 seconds from now. Cheers. Okay, so in the absence of no questions, so I see you, Tameklo. All right, glad to hear that you're doing very well. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page, and I do hope you've marked out these levels accordingly on your chart. Very, very important. They serve as a yardstick guiding our trading decisions and even guiding whatever positions we have active at this point in time. So please move your stop losses, mark out these levels, and let's see how the market is going to play out around this area. So with that being said, let's move into the final asset on our watch list for this week. All right. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, I'm so excited about this whole situation we have on the XAUUSD, as we indeed had the privilege of capitalizing on over 1,350 pips in the last 24 hours, though I wasn't able to capitalize on all of this profit, as I was taking out around the 2,435 while I was on the journey. Price broke out of the 1,435 right here, and then I moved my stop losses to, I think, 1,034.50 thereabouts. I was taken out of that position, and because I was on the road, I wasn't able to place buy limit order and the like. But for those of us who are working with me behind the scenes, we had the privilege of joining that momentum all the way. We had our TP target around the 2,470, giving the team about 1,350 pips on that one. And I do hope you guys also are able to be part of this profitable journey during yesterday's session, as we saw the gold take advantage of the weaker US dollar. So once again, congratulations to everyone who was part of this profitable journey. In fact, the gold is the most profitable asset on our watch list for this week. And for those of you who are going to be part of the Go Gold challenge, which is going to be starting in about 30 minutes from now, I will be sharing my account with you to see how I took advantage of those positions yesterday. In fact, that account, I've built that account. I was saying it was a $200 account. I've built that account past that. I will be sharing with you how I did it during the Go Gold challenge, and you will see, of course, that it is quite possible to build on this kind of account, depending on the psychology or your own perspective to the market anyways. But we are going to be looking on that one. So going back into the structure here, you will see that since the beginning of the week we have been buying the XAUUSD. In fact, let us go into the technical details of what really happened for the sake of those who are joining us for the first time. Let's look at what really happened at the beginning of the week and what led to the decisions we made. Now, at the beginning of the week, we had a beautiful structure on the higher time frame. For those of you who are yet to watch my weekend video on the XAUUSD, please click on the link right in the description box below. It will take you there, and you will see a top-down analysis how I did it from the daily to the 4 hours time frame, which brought us to this point you are going to be seeing on your screen right now. So at the beginning of the week, it was more of a range-bound structure, as you will see here. Price was confined within the 2,415 and of course the $2,404.50 level. That's about a $10 range bound structure. And if you remember vividly, at the beginning of the week, I did mention that based on the various factors behind the scenes that is influencing the gold commodity, the path of least resistance is still looking very bullish. But in as much as it is looking bullish, that we should not ignore the possibility that sellers could also come in. And the only condition I mentioned on Monday for selling opportunities is for price to break down, not only break down the 2,404, but retest the structure, giving us signs that buyers are finding it difficult to continue the momentum to the upside. Then we can join and had more positions at the breakdown of the 2,390. Of course, we saw this never happened and hereby negated any consideration of selling the gold at that point. But instead, what we saw here was quite interesting. Price broke out of the resistance line of the range bound structure. In fact, if you had missed out on that opportunity, the market came back, retested the structure a couple of times for about 2 hours thereabout, giving us the opportunity to be part of that move. And as you will see here, price continued to the upside, breaking out of the 2,425. Then as at my update on Monday, during the later part of the New York session on Monday, I updated us that all position has been closed due to that strong bearish move. And of course, I mentioned that we are looking to join the breakout of the 2,425 again. And this happened during the Asian session. So with a buy stop order there, we had that position triggered. We also added another one at the 2,000 434, which I told you I missed due to my inability to be on the chart to navigate the current market dynamics. But this was well laid out before I traveled, and we saw price move all the way into a new record high at the $2,482.38 level. So this is the highest point gold price has ever been in this particular market. And for those of us who are part of this profitable journey, congratulations and kudos to you. Now, as gold is now within an uncharted territory, an area where it has never been before, it is very, very important that we look out for significant confirmations before jumping into any positions at this point in time. So in preparation for the second half of the week, I do have a simple trading setup that will be guiding our decisions. But before we go into that trading setup, I would like to also give us an insight into what is really going on at this point in time, at least in the last 12 to 18 hours or so. Now, first of all, it is important to note that ever since price tested the $2,482 area, the highest level, we have seen price drop to the downside, and in fact this happened through the Asian session. And for me, I want to consider this move to the downside, this bearish move to the downside, as a retracement, which could be reflecting the profit taking activities that is going on in the market. Now the question at this point is, how far will this retracement phase go? Now, this is subject to the kind of pattern we identified around this area, which we'll be talking about when we go into the technical details. Now, another factor behind the scenes, which I've mentioned countless of times this week, is the dovish Fed expectation, where we are beginning to see that it is very, very likely that the Fed are going to be cutting interest rates as early as the month of September. And this, of course, has kept the US Treasury bond yield depressed and in fact in its lowest point in the last couple of months. And of course, we know how the US Treasury bond yield is directly proportional to the value of the US dollar. Now, if the US Treasury bond yield is not doing very well, it is expected that the US dollar will follow suit. Now, if the US dollar is not doing very well, of course, the gold is continuing to rise. It will continue to rise because they are inversely proportional. So as long as the US dollar is weak, the path of least resistance for gold is still very bullish. Now the question at this point in time, now we know it's going to be bullish, but the question now is, what route is it going to take? Is it going to retrace a little bit to the downside, maybe into our golden zone area, before it continues the uptrend move, or will it form an uptrend continuation pattern to continue the uptrend? So these are things that we are going to be looking at from a technical standpoint. But if you ask me, the path of least resistance is very bullish. Now, one event majority in the market may be looking forward to today is the US industrial production data, which is coming up in about 3 hours from now. I think we mentioned that earlier. Let's look at it again. So we are looking at the industrial production month-on-month data, which is coming up in about let's see, what time is that? That's about 1, 2, 3, 4, about 3 to 4 hours from now. It's going to be coming up. We of course are going to be monitoring price action to look out for structures and patterns that will help us to strategically position ourselves for that move. And for those of you who are going to be part of the go challenge, which is starting in about 30 minutes from now, you will be seeing how we are going to be navigating that. But of course, I will be giving updates on both my TradingView and Telegram platform. So in preparation for today's trading session, we have a new trading setup which I'm going to be sharing with you now. So this is what I am looking at this point in time. Now, what I did on this chart was to take into consideration the character of price action in the last 1 week. Is it 1 week? In about 10 days, in the last 10 days. And it is quite clear that the market has been very bullish. And to emphasize the bullish momentum here, we have an ascending channel to work with. So if we connect the series of higher highs, we have the resistant line of the ascending channel. And when we connect the series of higher lows, we have the support line of the ascending channel. Now, for the fact that price still remains within the ascending channel, it is quite reasonable that we continue to look out for patterns and structure that supports the idea of buying. But if you are a short-term trader or a scalper, we could actually find out short-term trading opportunities within this range, especially if price is within the resistance line of the ascending channel. Now, if we zoom into the current structure, that is looking at what has been going on here in the last, let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9 hours, you will see that price has been oscillating within the resistance line of that ascending channel right there. Now look at what has been going on. Let me give a visual representation. So we have this impulsive move into the all-time high at the 2,482. We have a resistance line at the 2,480, lining up with that ascending resistance line of the ascending channel. We saw price drop back here and then comes back here again, and it appears we are looking at price dropping back again. Now the question here is, will it drop into the support line of the ascending channel, which is going to be dovetailing to, let's see, about 320 pips if we can capitalize on that opportunity, which is quite massive. And I'm beginning to think that I would like to be part of that move if we see something significant that supports that idea. So that is one scenario we are going to be looking at today. And then the other scenario is to see if price action will break out the resistance line at the 2,480 after forming an uptrend continuation pattern, giving us a good opportunity to join the uptrend move. So we are at a very crucial juncture in this market. We are depending on what happens around this area will be a key determinant of where we are going to be going. Now, in order to navigate this area much more better, we would like to scale down to a much more lower time frame, let's say the 15 minutes time frame, to see things more clearly. Are we going to be seeing a reversal setup to incite a retracement to the downside, maybe into the support line of that ascending channel, or are we going to be seeing an uptrend continuation pattern that will support the breakout of the 2,480 to join the uptrend move? Now, scaling down into the lower time frame, let's go into the 15 minutes time frame right now. We begin to see something interesting happening around this area. Now, we have seen price tested the 2,480, comes back down here, and one thing you will notice here is that we have a higher low. This is a higher low. This is the previous low, and then we have previous lows here. So for me, I would like to connect the higher lows here to give me an ascending trend line that will be helping me guide today's trading activity. So let me look at this closely. So okay, we have something like this. So we have something like this. So I would like to thicken it because it's going to be playing a significant role today. So we have something like this. And then if we extend that further, we have another one like this. So we have a beautiful ascending trend line guiding our trading decisions for today, which is quite impressive. And of course, for those of you who have been with me for a while now, you know how we use our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that support the idea of buying this asset. So at this point in time, bringing back my candle chart, it's much more reasonable to look out for buying opportunity anywhere from this area. Now, if you are a more conscious trader, you want to be waiting for price to break out the 2,480 before joining that uptrend move, and then having your stop loss maybe around or below the ascending trend line. That's about 100 to 120 pips thereabout before continue that momentum to the upside. So we'll look at how we are going to be managing this here. So I still hold on to a bullish bias at this point. Now, the only condition that will make me sell is for price to break down the second ascending trend line, where a retest of structure right here on the lower time frame, or maybe on the 5-10 minutes time frame, will give us confirmation to sell. Then I could be looking at more opportunity to sell if price action breaks down to 2,450. Mind you, we could still see buy pressure resume from this area again, and of course I will be giving us updates as at when due. So this is my simple view on the XAUUSD for today. I hope I made myself very clear. So we'll continue to monitor price action up within this ascending trend line and that 2,480 area to navigate the current market dynamics. So the question now is price going to the upside? Well, the structure will tell us. or is it going to the downside? Of course, the trend line is going to tell us. So this is my view on the XAUUSD for today. I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if we have any questions before we go into rounding off today's session. And I have some good news for you in a moment. So stay tuned in, and do not forget to give the video a thumbs up. Your likes are very valuable to me. It helps the algorithm promote the video to a wider audience, and of course it also inspires me to do more of this content. So let's see how much we can go, but most importantly, let's make the likes tally with the number of people on board. So I'll see you in the next 10-15 seconds from now. See you soon. Cheers. So in the absence of no questions, I want to assume that we are all on the same page on this one. And I'm just beginning to see some recent development unfold on this chart right now, and begin to see some buy pressure resume around the 2,470 area. And if price continues to maintain above this area, it looks promising to buy. And in fact, due to the fact that we have a very good risk reward ratio around this area, it's reasonable that we risk some of the profits we had made so far this week and test what around this area. So personally, I am going to be placing a buy stop order right away, and then make sure that my stop loss is right below that first ascending trend line. I think that will be dovetailing to about how many pips? That's about 47, let's say 50-60 pips thereabout on that one, and then place a buy stop order again above the 2,480 to continue the uptrend move if ever price action will break out of that structure. But remember, the only condition that will make us sell, which may be a short-term trading opportunity, is for this ascending trend line to be broken and retested. But for those of you who are going to be part of the go challenge, we are going to be looking at this together. It's starting in about how many minutes? From about 15 to 20 minutes from now, we are going to be starting that session. So I look forward to seeing you guys right there. So with that being said here, I think we have come to the end of today's Forex Morning Mastery. In fact, it has been a wonderful moment with you guys. I really appreciate every single moment with you, from Sharif Abdulkadiri to Adelowa Dediron to Tammy Klo. Who else is here again? Odueno. You guys are wonderful. I really appreciate the positive energy in the house, and I really appreciate the support you gave me today. Let's look at how many likes do we have. We have about 14 likes today. Thank you guys. Thank you very much. I really appreciate your support. You've inspired me so much, and I will continue to drop this simple and insightful content always. So with that being said, here we have come to the end of today's Forex Morning Mastery, and so far today we were able to attend to the 3 financial instruments on our watch list for this week, which includes the USOILSPOT, which is doing pretty well at the moment, and we are looking at potential buying opportunity on that one. And we've talked about how we are going to be selling if price action breaks down the support line at the $80.35 level. So I hope you mark those levels out. Then on the GBPUSD, we are doing very well on that asset at the moment, and we are looking forward to more buying opportunities if we see an uptrend continuation pattern. And we also talked about the potential of a retracement to structure on that one too. Then finally, on my XAUUSD, my favorite asset, we're doing very well on this asset too, and we are looking forward to see how the market is going to be reacting or responding to this uncharted territory for new trading opportunities. So we shall continue to monitor price action, and I will definitely be giving us updates on both my TradingView and Telegram platform. And another thing is to confirm that you all have marked out these levels on your chart. They are very important, as they help us to navigate this market dynamics effectively. And if you have done that, well done to you. So all we need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you have done so, I look forward to seeing more of you. Same time on Friday, that's 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done so far, and of course prepare ourselves for an expected volatile last trading day of the week, where we are expecting market participants to start rounding off their trading activity ahead of the weekend. So I look forward to seeing you on that one too, and thank you very much once again for your support. And for the Go Gold Challenge members, I'm looking forward to seeing you very soon. So it's on this note, I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.